After incredibly rapid growth, it appears that Anthropic is getting ready to raise again at a big valuation jump. Welcome back to the AI Daily Brief Headlines Edition, all the daily AI news you need in around 5 minutes. Well, friends, $1 billion is no longer cool. You know, it is cool. $100 billion. Anthropic is reportedly in the early stages of planning another investment round that would see them valued at, yes, the much-vaunted 12 figures, $100 billion. Now, apparently, the sources say that Anthropic isn't formally out fundraising, but is rather fielding interested inbound from VCs. Now, the company last raised funds at a $61.5 billion valuation, but they are growing very quickly. Recent estimates have their run rate at $4 billion annualized, but that's up from just $3 billion in June and $1 billion at the beginning of the year. Now, a big part of the revenue bump is driven by the release of Claude Code. The tool has already reached 3 million weekly downloads, which is more than the monthly downloads of the Claude iOS app. Anthropic expects revenue to continue to grow in the coming years. Their optimistic projection is reportedly $35 billion in revenue by 2027, which would close the gap with OpenAI substantially. Their base case is $11 billion in revenue over the same time span, which would still be tripling sales in 2.5 years. Margins are also apparently improving, with Anthropic reportedly telling investors that gross profit margin is now at 60% and headed towards 70%. Still, if you're looking for takeaways, it is very clear that there is continued appetite, even at the most expensive levels, for the very small number of very top AI labs. Now, one other interesting bit of good news for Anthropic. Turns out the grass isn't always greener in the AI talent war, as 2 key Anthropic leaders return. 2 weeks ago, Cursor pulled off a coup and poached Boris Cherny and Kat Wu, the lead developer and the product manager responsible for Claude Code. The information now reports, however, that they are back at Anthropic, apparently ditching Cursor before they even had time to set up their desks. Speculation is understandably rampant around what caused such a quick reversal. AI entrepreneur Palash Shah writes, "They really took a peek into the front door and dipped. Curious what the deciding factor was. Size of company, they realized they didn't want to be on the application layer. But what about a company could you discover so quickly that makes you leave? Some speculated it was a spy mission, or that the pair didn't like the look of Cursor's unit economics. Alex Yang, an AI hiring consultant, wrote, "Have it on good authority that Anthropic beat Cursor's pay package offer. Dario just couldn't get alignment over paying a PM or software engineer even a fraction of what the researchers are getting." Now, if that's true, that's an interesting new wrinkle in the AI talent wars. Researchers have been the driving force behind AI growth, but could we be witnessing the start of a shift towards product people getting paid as well? It would certainly align with a broader transition to the app layer becoming the most important part of the AI business. I'm certainly waiting for the communications layer to be valued that highly, right? Now, others took this way farther. If it's just about the right compensation, then this is weird, but really ultimately no big deal. However, some, like Mark Egan, wrote, "Boris and Kat back at Anthropic after 2 weeks at Cursor is a huge indicator that Cursor is a sinking ship. There is literally nothing they can do to stop the bleeding. The only way to slow it is rug-pulling users. Not a doomer, but it's over for Cursor." I don't know, man. Seems like a lot of speculation to me. Cursor, by all accounts, continues to do nothing but grow, but it is quite an interesting story from the outside. Speaking from the it's so over end of the spectrum, Scale AI is apparently laying off hundreds of employees as the company adjusts to life after the Meta acqui-hire. Now, much was made of the recent Windsurf saga and what it means for the employees left behind after a big acqui-hire deal. That story seems to have a reasonably good ending, with Devon creator Cognition Labs snatching up the remainder of the startup and providing employees with a soft landing and a place to keep building the type of thing they were building. At least at first glance, on the other hand, Scale looks like a case study in what it looks like when a founder leaves a vacuum behind after the acqui-hire. It was already reported that Scale AI had lost Google and OpenAI as customers, which represented more than half of their business, and now apparently they've laid off 200 full-time employees, which represents around 14% of the workforce. The company will also stop working with 500 of its thousands of global contractors. A spokesperson said the move is aimed at, quote, "streamlining our data business to help us move faster." They also said that Scale intends to staff up in other areas, including enterprise and government sales. Interim CEO Jason Droge told staff that the layoffs were a result of bringing in too many people too quickly over the past year. His memo said that led to too many layers, excessive bureaucracy, and unhelpful confusion about the team's mission. He did add that shifts in market demand had contributed to the decision to restructure as well. Ultimately, he said, "We remain a well-resourced, well-funded company, and today's announcement will allow us to accelerate new investments and resources where necessary." This is nothing if not a fast-moving industry, I will tell you what. And speaking of which, OpenAI just released a new ChatGPT agent, so I think it's time to go talk about it. That's going to do it for today's episode of The Headlines. Next up, the main episode.